and thank you for joining us. My name is Julie Moon. I'm Senior Research Analyst at Finovate, and joining me is Dr. Louise Beaumont.
Hello.
Thank you. Thanks for joining us.
Good to be here.
Great. So as co-chair of Tech UK's Open Banking Working Group, Dr. Beaumont advocates for financial services policies. She also serves as an advisor on Open Future for Publicis. And I hope I said that right.
Yes, you did.
Got it right, great.
Yeah.
She's also an investor. She invests and advises in a rich selection of startups. Great. So diving into our questions now, so there are a lot of stakeholders in open banking, and one of the first that comes to mind are obviously banks. How do banks stand to benefit from open banking, and how do they stand to lose out?
It's far easier to see the ways that they're going to lose than the way that they're going to gain. That said, banking is a mixed ability class, and while some will fail, clearly, some will stand to succeed. The question is, how big will the banking marketplace be post the open future? And what I mean by that is I'm drawing a distinction between the banking segment and financial services, because obviously innovators and disruptors will be doing so in the broader financial services space. And the question is, do the banks just get pushed back to being the infrastructure layer, hold money, move money, and lose that customer engagement and thus insight space? Now, they've pretty much lost that war before they even realized they were in that war. So the question then becomes, can they change their business model to adapt? And the business model question is a big one, because banks, basically, their established business model is keep the customers in the dark and exploit their ignorance and their inertia. And in a service-driven world, that business model is a problem.
So now taking a look at Fintechs, how do Fintechs stand to gain, and how might they lose out?
So Fintechs, we've had the Cambrian explosion, the million Fintech startups driven in this country by the crack cocaine of CDIS and EIS, so tax beneficial investing. That's fantastic. And basically we've got two types of fintech. We've got those which are putting in place perfect point solutions for today. And these are a way to make friends with the banks to solve point solutions for banks, to have some fintech lip gloss on the fat porker. Now, the issue with that is, what is the greater disruption and where's that going to come from? Some may come from fintechs, much more likely from the tech titans. So my idea is that the fintechs need to cozy up with to provide innovation to incumbents, but at the same time, the smart ones will be thinking about how to cozy up with those bigger disruptors, which are far better, more experienced ecosystem players.
Yeah, definitely. Okay. Now you mentioned that there are two other big players that need to be addressed here, and those are data players and also tech titans. Talk a little bit about their role in open banking.
So tech titans, that's the easy one. That's Amazon, it's Facebook, it's Google, and it's also big Chinese players. So it's not just an American game here. And the point here is that they can, with customers' permission, consumers and small businesses, access banking data through open APIs as those APIs are opened up. These are data-first players, they're API first, they have huge consumer bases themselves, they have rich levels of trust and engagement from customers, different type of trust to banks, but very powerful engagement level trust from customers. More importantly, they have huge financial reserves, they make big bets, and they're not overly worried if something doesn't turn out right the first time, so they're brave, they have courage. They're busy creating the future we all live in, but far more importantly than all of those reasons, I would offer up two more. One, great power of computing in the cloud. They've got the biggest compute power of anybody. And secondly, they have trained their shareholders to expect explosive growth, not quarterly dividends. So they've got a different shareholder base with different expectations, so they can make those big bets for all of the reasons I just laid out. Data players, I separate out slightly because they might be incumbents, but incumbents in retailing, incumbents in energy supply, telco supply, and others. These have rich customer data sets, which they can now augment, only needing the consumer's permission, with banking transaction data. In the first instance, only current accounts, but subsequently savings and loans and mortgages and more.
Yeah. So do banks need to be scared? I mean, Amazon just opened its checking account and you mentioned all those other large data players. Should banks be scared?
Obviously, yes. And what Amazon is doing is just taking the bid at once. It's allowing JP Morgan Chase and Capital One to provide that infrastructure, hold money, move money. What Amazon wants is the engagement layer. And actually, they've won the right to have that. They've won the battle for that customer's attention.
Yeah, great. So let's take a look at the most important stakeholder in all of this, who may be the most blissfully ignorant stakeholder in all of this, and that is the consumers. How do consumers stand to benefit from open banking, and will they benefit, or will they be too fearful to share their data and perhaps lose out?
Yeah, I do get absolutely despairing every time I see another crap piece of research which is poorly executed, which asks people, will you share your data? And people obviously get, well, the right answer here has got to be no, I will never do that, because that would be bad. Actually, we all share data with impressive promiscuity on a daily basis. And the crucial point here is we have been trained by the tech titans to so do over the last 10 to 15 years.
Yeah.
Now, will we open up even more? Absolutely. And we'll do so based on the quality of the services we're offered. So if you'd asked me, will you share where you are with a big faceless American company that is frankly sounds a bit scary, I'd have gone, no.
Yeah.
Do I use Uber? Yes, of course I use Uber. So it's about the service, and you realize it's a value exchange. Are you prepared to do it? Now, I think there are 5 signifiers of a successful company operating in the open future, one of which is brand. How stretchy is your brand?
Yeah.
Can it stretch to accommodate new services, new ways of doing things? Secondly, talking and listening. Can you do that? Now, Amazon is a perfect example of an incredibly stretchy brand.
Yeah.
Amazon Balance, Amazon Key, Amazon Fashion. Try that with Barclays.
Yeah.
Right? It just doesn't stretch.
Barclays Fashion, no.
Yeah. And try that with the talking and listening. Amazon built Alexa. Other voice assistants are available, but they bought that as a way not only for you to talk, but for them to listen. Service design, well, Amazon Key, the idea that you would let them through your front door to deliver your parcel, because it just takes another bit of friction out of commerce. Service delivery, well, of course, that's API driven, but it's far more than that. It's about creating an ecosystem which gives you best access to most innovation. And then that data layer, you've got to find it, you've got to augment it, you've got to torture it, you've got to listen to it, and then you've got to act. In my view, that's the tech titans.
Yeah, certainly so. Great. Well, thank you so much for your time, Dr. Louise. That's all we have time for. And
thank you.
Thank you all for joining us.